Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got a losing session overnight with the 30-stock Dow tumbling more than 400 points, 0.9% lower. The S&P 500 pretty much the same, down 0.8%, and same for the Nasdaq Composite, lower by 0.9%. And all this coming after the latest trade updates out of the White House. We have on Monday the president posting letters outlining tariff rates on 14 countries to go into effect August the 1st. And also more to come with announcements expected to be forthcoming from the White House this week. So lots of attention on what might transpire and maybe even more trade deals to come in the last few moments. To check in with us on what is playing out in the markets, we've got Frank Cappelleri. He is the founder and president of CappThesis. Frank, thanks for joining us on the show. How are you doing?
Hi, Ryan. Doing well, thank you. How are you?
Awesome. Great to hear. I'm doing well as I can be. Let's talk about how well markets are going. And we've got a bit of a losing session overnight. I suppose not a big surprise considering how there's a sense of nervousness. Is that a way to put it? Or caution in the air?
I think caution is a great way of putting it. And we know the reasons why. You laid them out very well. It's, of course, tariff talk and earnings season around the corner and the Fed. So all those things are on investors' minds, but I think we all understand that there's been just a historic comeback over the last 3 months, which no matter what the news comes over the next few weeks, this type of advance is not sustainable in terms of the pace. That's not a surprise, but I think what needs to happen is the S&P 500 and the other indices need to show that they can digest and the profit taking that is probably around the corner at this point.
Yeah, let's talk about what's been playing out. Of course, you mentioned we've got a bit of a bounce in the past few weeks, and that has seen new highs in recent weeks as well. And you've noted it as well, we've seen a bit of a golden cross moment. How much should we be reading into this?
I think that's a very good point. Golden cross is, of course, when the S&P 500's 50-day moving average crosses over the 200-day. And I think the big picture point of view with that is that it does have a very good record over the next 12 months. And I think a lot of that has to do with the fact that just the market is typically higher, right, versus lower over the very long term. And what I think needs to happen at this point is after you have a very strong rally from a volatile period like we did, for this to turn into something more, a longer type of advance, it just needs to be more consistent going forward. We can't expect the same type of moves that we've seen since April at this point.
All right, so about what could be potential catalysts down the road. You've got, of course, the trade deals. You've got also the FOMC meeting coming up in July. Also, earnings coming forth. What are you expecting first from the FOMC, where you have, in recent comments, Fed Chair Jerome Powell saying he would have already cut rates if not for those tariffs?
Well, I think right now they're still data dependent more than anything else. I mean, I guess anyone can say what could have happened, but going forward, I think it's just the job market was a little bit different than expected on Friday or last Thursday, I guess, and that really put a change into what the Fed funds rate was predicting for July. I think it was around 15 and 20% potentially for a cut. Now it's like below 10%. So I think September's back on the table still, and a lot we'll have to do again with the data between now and then.
All right, so data on jobs closely watched. Talking about data, earnings will be coming forth, and of course, to some degree, we could see tariffs or the expectations of tariffs being factored in these numbers.
We could. It will be interesting as well because remember that we went through the first earnings season in the middle of all this. It was excessive volatility, and now 3 months later, again, with the slingshot back higher, most stocks are higher than they were back then. So I think people are still in wait-and-see mode with the tariffs because there's just been so many different iterations from that point. I think it'll be more focused what the earnings are, and what maybe effect AI has had in some of the operations as well for some of these companies.
Okay, so how do you approach what we have right now with the backdrop of tariffs? Should be reducing exposure from the likes of Apple, which has a supply chain in many of these tariff-hit countries, those trade-related names as well. What's your approach towards the markets?
Well, I think we can all understand that the worst case scenario that was potentially in play in April is off the table. And I think that's just reflected in what the market has done since that point. And based on, today, I would say that the news wasn't great from a tariff perspective. Yes, the S&P 500 and other indices were down, but not a lot compared to what we saw in March and April. So I think a lot will have to do with how the market, again, absorbs the next round of profit taking, because no matter what the news is, from a macro standpoint or micro earnings standpoint, I think all of these companies and stocks have earned the right to at least pull back somewhat. And we'll see, if that dip is bought. That's, I think, the most important thing. It's not when the sell-off comes, but what happens to it once it arrives.
Okay, what is the impact on the smaller cap names when you consider how they are typically seen as a barometer for the U.S. economy?
Well, as you know, small caps have been underperformers for quite a long time, and I don't think we can put much into any of the short-term rallies that we've seen in them overall, only because they've been fleeting or they've been temporary at this time. And I think that's a good trading mechanism sometimes when things get a little bit oversold. But in terms of reading into what they say about the greater economy, I think that's a little bit. I think things have changed from that regard, because, again, the relative weakness for so long has been with us that they're really now looked upon as an alternative, especially when so many of the mega cap names are not only influencing the indices, but they're doing much better.
All right, it's a great overview of where things are going, and definitely more to come. And helping us out this morning has been Frank Cappelleri. He is the founder and president of CappThesis. Frank, always a pleasure having you on the show. Thank you so much for your time and insights.
Thanks a lot, Ryan.
All right, catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.